Hey guys, Jeff with OptionBoxer.com, back again with another tool I wanted to share with you guys. It's a value average tool. In particular, it's about value average investing. There's kind of two sides of the fence there. A lot of people think it's good. A lot of people think it's bad. I'm in the camp that believes it's of value, so no pun intended, I guess. But let's go ahead and get into it. So I've created this tool with simplicity in mind, and I just want to go through it really quickly. So what you'll be met with, if you do get your hands on this tool, it is available, and there will be a link in the description on my web store at OptionBoxer.com. But you can start with the manual. So we'll come down here to the manual table and kind of look at it. So you'll need a couple of pieces of information. Admittedly, you don't necessarily need the ticker symbol. I just put it in there so I can keep track of what I'm kind of value averaging. And then you'll put the starting number of shares. Let's say we wanted to start with 15 shares. I have 100% in there, but let's say we wanted to maintain a 10% growth path. And then you'll see some just hypothetical data here that I entered over the course of several years, starting back in 2000. And then it's basically just going to walk you through, based on the current price of Apple in this case. It's going to walk you through at what point you need to buy more shares based on this action column, or it's going to tell you if it's a minus number, it'll tell you when to sell shares. So with just this hypothetical data, you can see currently we hold 19 shares. We've actually been paid $1,899 over time because we sold a number of shares here in the last period. And so we have a total profit and loss of $2,887, which is an insane percentage return. You can see if we had just bought 15 shares way back in 2000, and this were actual data, and this were 2005. And the current share price was $52. You could see we would have a nice percentage return, but not anywhere near the percentage return using the value average investment. As a quick side note, the way I use value averaging in my own trading is I try to value average into a position until I can get up to 100 shares for free. So I may end up value averaging into 200 or maybe even more shares depending on the amount of capital I have available. But ultimately I want to be in a situation like this right here where I've basically acquired enough shares, and between dividends or covered calls or whatever else I'm doing to get to that value, I just want the shares to have cost me nothing. And then that way, in this case, I'd have 19. But what I'm trying to do is get to 100 that don't cost me anything. So it's a long game. It's not going to happen in a week or 2 weeks. It's going to take years to get to that point. But that's what I try. That's what I'm doing with my own investing. Just so you know, kind of what my goal is. That way, once I get to 100 shares that didn't cost me anything, I can reallocate that capital, and I can start selling covered calls and cash secured puts, as price fluctuates. But regardless, here's the manual tool. To get back to the home page, you just click the home button. We'll take a quick look at the calculator. Super simple. It's the exact same concept as what we just looked at, except now you don't have to look at the table. It's kind of just going to show you, based on these 4 criteria here, what you should be doing. Let's say we bought in at $25 a share. The current share price is, I don't know, let's go crazy. And we have a 45% growth path. We can make that 1% if we wanted to. We can make it 100% if we wanted to. And it's going to tell us, let's say we made it 1,000%. Well, it's going to tell us what we need to do to maintain that growth percentage. So right now we would be buying 26 shares. Super simple. It's just kind of a cleaner way to look at the information. And then finally, kind of the coolest feature of this value average tool is the backtest module. And so you would simply come over here, and let's say we wanted to look at Apple again. We would hit refresh the data. As soon as that is done loading up in the background, which could take a second, you'll be prompted with a dialog box. And then you'll simply just click through the different options here, and it's looking at the yearly option here. It goes from 2000 all the way to 2022. This will update itself, so as soon as we're in year 2023, you'll notice that the last day here that's provided is I guess Friday, this past Friday. That will update each market day as data becomes available. But it goes all the way back 22 years, and then it's going to tell you, how this has looked based on your growth percentage. If you wanted a 15% growth path, you could certainly put that in there as well. You only have to refresh the data after you put in the ticker symbol, and then you can run through and kind of see, in this instance, this would be a good situation again. While the buy and hold would have obviously returned you more dollar-wise, percentage-wise, you would have been in a much better position and you wouldn't have tied up that small amount of capital. But really and truly, Apple wasn't trading for 89 cents back in 2000. That is split adjusted, so it was considerably higher than that. I think it's been split a few different times, but regardless, it shows you all the data here. You can go through it at your leisure, but it also compares to the buy and hold, and you can do it for any asset you can think of. I can't think of anything off the top of my head, but just type in the ticker symbol, hit refresh, and then you can look at the daily. Obviously, you know we're in a bear market. None of this would be good. If you were trying to do this every single day, value averaging, you better have a nice stack of cash to spend. Kind of looking at this, you would have put in $128,000. You would only be down by $889, which on a percentage basis isn't that much. If you had just bought and held, for the last month, essentially, you'd be down by basically 1.5%. Weekly, very similar, not down by much, but a lot of money to be there. Buy and hold, you'd be down considerably more. Monthly, you'd be down a lot more as well. But again, to value average in on such a short period of time would take a sizable amount of capital. And then yearly, you can see how Verizon would look. You'd be up by $12,000 or 13%. The buy and hold would have been better if you're looking at a 22-year period, but many of us aren't. But it's there in case you want to go through it and just check it out. But that's it for this video. I do hope you'll like, subscribe, comment on the videos that I make. If you have any questions, you can reach me at jeff@optionboxer.com or in the comments below. Thanks for watching. See you later.